Hey guys, Mike here. So we finally got the report from BlackRock on their most recent purchases, and we're going to go over the largest ones. I think some of them will surprise you, and it's important to understand what BlackRock purchases because they are the largest hedge fund in the world with almost $10 trillion under assets. So they are enormous, okay? And the great thing about this, it'll give you some ideas because I'm going to cover the top 5, and they go in different industries, each one of them, and some of them are very large purchases. And what's really great is you'll get to see the average cost of what they're actually in on each one of these stocks, and you get to see, wow, if I would have known BlackRock's buying that here, here, and here, I may have been in at that price. Okay, so just keep that in mind, and don't think when BlackRock makes the purchases, the other funds aren't sticking their head out going, what are they doing over there? All right, so that's why it's important. And understand these videos take long to put together. A lot of you guys wanted me to put these together, so I finally have. So please do me a huge favor. Hit that like and subscribe button. It helps other people find the video because these do take a lot longer to put together, okay? Now, going into the first one, all right, some of you might be in the stock yourself. It's going to be Palo Alto Networks, right? And look at this purchase, 30% increase in their shares. And so that's over 5 million shares they purchased in the second quarter. And when we look at this one, obviously this is one of these cybersecurity stocks, and they have been running up like crazy, and they've done just what all the other cybersecurity companies have done. They have mentioned the word AI many times. And when we look at this one's chart, you can see obviously 2022 crash and burn, but then here we go. Once we break that trend line, like I always tell you, big move up. You might see a huge pop up there going from May, and you think to yourself, what in the world happened? And I'm going to show you exactly what happened. But make no mistake, this one's selling off like a lot of others, and it's got earnings coming up here in August 18th, so this week. And so keep that in mind. But understand what they do to get this thing pumped up. They end up launching an AI product called XSIAM, right, which is expected to reach 100 million in bookings faster than anticipated and has already secured a $30 million in bookings since Q1's launch. So the market loves that, so it gets the AI pump. And then, of course, if you look at some financials here, just looking at the valuation and stuff, I like this site because it can give me a quick look and everything about what's going on. You can see trading at 46.7 below what they consider an estimated fair value. Again, depends on how you calculate that. And then earnings are forecast to grow 28.64% per year. Became profitable this year, which the market absolutely loves. And these last two notes you'll see on almost every stock, so just really ignore it. Significant insider selling over the past 3 months. That's why I showed you the chart first, and I would have sold too because that is an AI pump, as we've seen on most of these stocks, and the executives are up huge. And then if you look at some key valuations here, the price of sales, because it is profitable, is what we're going to go with. And you can see is at 10.3, and some people say, well, that might be high. And it's like, well, let's compare it to some of its competitors and see where it's at right now. We know the market's frothy, that's why it's selling off now. But if you look at compared to CrowdStrike, ServiceNow, Fortinet, or VMware, I mean, it's right dead smack in the middle. So it's not really that high of a valuation compared to some of the others, right? And then when we look at growth forecasts for this company, you're looking at earnings and revenues growing around 28.6%, 15.8% per annum. And then the EPS is expected to grow around 29.6%. And return on equity is forecasted around 47.6% in 3 years. But again, this will report earnings. And I understand if it doesn't hit that bar, you're going to see another Fortinet right here. As you can see, it reported earnings. One of its competitors dropped 25% in 1 day. If you look at the other ones, they've been selling off too, just like this one is right now. You got AWRE reported, boom, 18% down since earnings. And then there's ServiceNow, which reported, and you can see it's only down about 9% since earnings. And so these have run up a lot, and they better hang the moon on earnings. So just be aware, because on this channel, we give you the whole picture. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And that leads me into number 2, and this is where you get to look and say, where are they setting themselves up for the second half of the year? And what have we been talking about? Energy. And so they decided to go with ConocoPhillips right here. You can see the increase of shares by 10% in shares, and you can see they're sitting there at an average of $55. So they've been buying this one for quite a while. And why are they doing this? It's simple, because ConocoPhillips obviously is not just oil, right? They're oil and natural gas, but more importantly, what we've been talking about on the show, XLE breaking out. A lot of people think we're going to get a bump up. That's why you're seeing gas go up. Here's ConocoPhillips chart. Has been following this trend line right here. So when they started buying back in, you can see it was bouncing right off that trend line. It got its break up. And why has it been going up? Same reason all their other competition has been going up, because of oil, right? It has been moving starting in late June right there. You can see it hit a major resistance area, came back down to this trend line where to see if it breaks out or not. But the other thing they're into is also natural gas. What else has been getting a bid here since really around May? It's been natural gas, okay, after being absolutely crushed, as you can see by this chart right here, going from 10 down to almost $2. And so they call it the Widowmaker for a reason. But again, this one's been getting a bid as well. So this could be right. They're picking ConocoPhillips as their play to try to see if we actually continue to get this bounce, because they do have a guy at BlackRock. I think he's been calling for some kind of commodity super cycle for like 3 or 4 years now. So we'll see if he's right or not. But I think that's why they're trying to play ConocoPhillips. Now, Abgo, also known as Broadcom. This right here is a play on many different things. As you can see, increased by 6%. And this ain't a cheap stock, all right? Their average is $282. It obviously is well above that when we look at right here. But this one is one of those companies, they've made like 39 purchases so far. So they're in all kinds of industries. They're in the Broadcom industry, the cloud, and semiconductor industry. And you can see right there in April, you see that huge pop up right there. And we're talking about a very expensive stock. That's a big run, all right? And I'm sure you can guess why this has popped 50% since April. And if you look back on the long-term chart since 2020, I mean, what a steal. Whoever got in this thing at 200, it's just absolutely been a beast. It's up 211% since 2020. But the reason why I got that pop in April, and I think the reason why you're seeing BlackRock like it, is, again, AI, right? They say Broadcom, the AI chip maker to watch, and also Broadcom, which is another acquisition here, of VMware, a major growth, is going to be a major growth catalyst for it. This chip maker is acquiring a virtualization platform company to gain significant foothold in the business software market. So they are in a lot of different industries. And when you look at this one right here, obviously earnings are forecast to grow about 10% per year. Earnings grew at 58% over the past year, so a huge year for them. Pays a reliable dividend as well, so I'm sure BlackRock loves that with all the shares they have. Has a high level of debt, which we expect with all these acquisitions. Don't worry about the insider selling stuff. I told you it appears on every single stock right now. And then you got their PD at 25.2, and you go, oof, boy, that seems kind of rough right there. If we scroll down and just kind of compare it to a lot of its competition, which is, for me, hard because they're in so many different industries, you'll see Analog Devices, Texas Instruments, NXP Semiconductors, Qualcomm. So obviously it seemed a little rich. Yeah, but when you look at the industry average, they're right there with them. And so anything has anything to do with semiconductors, cloud, anything like that, usually is going to be higher, right? You look at their finances, got way more short-term assets than short-term liabilities, and they have more long-term assets than long-term liabilities. And just looking at some fundamentals quickly, you got net debt to equity ratio at 126.4, which is definitely high. Debt to equity ratio has increased, which I expect with the way they run the business. With all the purchases of these companies. But then you got the average debt is well covered by operating cash flow, 44.6%. And then interest payments on its debt are well covered by, this is expenses before interest and taxes, and that's around 10.4x coverage. So that's a good one. And again, this is just, if you're looking for something, which I think that's what BlackRock is looking at, that delves into cloud, semiconductor, and Broadcom areas, then this is your play right here. So, I mean, they've been in it for a while. And number 4, purchase of BlackRock, we should all know because I covered almost every day on this channel. And if you're new here, please hit that subscribe button, is Tesla. Why? Because it's the #1 EV maker out there. They increased their shares by 4% or over 7 million shares. And you can see their average is $98. So they are in at a low price, a low average, and they're high up. On this one, it's very simple. Tesla moves off the chart and off options and news, right? Don't worry about fundamentals on this one. I'll show you a little bit that might surprise you though. But you can see it's been in this falling wedge like we talked about. The MACD's crossed the 0 line. RSI's crossed that 50 line on the daily, which you really don't want to see. But then, you know, we look at these moving averages falling below the 50, closely approaching that 100. If it gets to the 100, that means it filled another gap. It actually filled another gap today. So I get to take that gap out, which is nice. to see. It did get the bounce, which I guess we kind of expected. If we bring in over here the volume profile, you can see what I'm talking about. When this thing loses 235 and it can't regain it, when you're sitting in that huge gap, and today dip buyers came in, right? It fell out of the falling wedge. They came right back in, but this is why. Look on the weekly. This is why they want to regain 235 and not lose it, because you're sitting here in a huge volume gap just because of the way it moves, and it can fall quickly. Okay, you'll see a lot of people saying that if it loses 235, you're going to see 220, 215 very quickly. But again, we're sitting here in this point in the market where we'll probably see a bounce anyway. But now, getting back to Tesla and why BlackRock probably bought them. One, it's the #1 EV maker, so it's their EV play, right? Another one, earnings are forecast to grow almost 22% per year. Earnings grew by 29% over the past year, okay? And when you look at the balance sheet, though, it actually gets 6 out of 6 on the health criteria, which they rarely get on this site I'm using. But when you look, obviously, way more short-term assets than short-term liabilities, and especially the long-term assets versus long-term liabilities. And when you scroll down here, you can obviously see by country mile, they cover that, not a problem. But also the fact that Tesla has more cash than it holds in total debt, which I love to see. Tesla's debt to equity ratio has reduced from 221% to 3% over the past 5 years. That used to be a huge problem for them. Tesla's debt is well covered by operating cash flow, 918%. And Tesla earns more interest than it pays, so coverage of interest payments is not a concern, obviously. The biggest problem they have is what's been going on and why the price is falling again is because the day this came out, that they announced they're going to be cutting prices again because they're in a price war in China, because we know China's economy is a hot mess right now. Again, I'll go over that in just a second. Now, #1 should be no shot. Apple, right? Look at this. They own over 1 billion shares of Apple at an average price of $36. Can you imagine 1 billion shares of Apple? That is crazy. And look at it, their portfolio is so big, they bought 4 million shares, is only 0.45%, but it's almost 5.5% of their total portfolio, right? Which is enormous, okay? And one reason is simple. I'll give you a couple of reasons. One, you'll rarely find any seasonality charts like this for any stock, but Apple is just one of those stocks. It's the most #1 owned stock of any hedge fund, any retirement fund, right? And yes, it goes down, it has its periods, but you saw last year it's not allowed to drop like other stocks are, okay? So there's no 50 to 75% like Meta or Netflix or any of the rest of those. Not right now, at least, but you can see obviously down about 10%. It's been holding up since it reached that 10% threshold and stuff, sitting on that 100 moving average like we've been talking about and everything. We'll see if we get a pop back up or not. Again, we're in seasonality-wise for the whole market weakness right now. But you saw NVIDIA today, you tend to get these pops up, okay? When you look at the balance sheet and some financials, obviously they got more short-term liabilities just by a little bit than assets, more long-term assets than long-term liabilities. And the debt's not a problem. It's well covered by the operating cash flows. We know 103.5%. Interest payments are easily covered by their earnings before interest and taxes. But the big problem with Apple, and I'm always curious to see how long they're going to keep this thing going on for as far as all these hedge funds buying it, is earnings have grown about 15% per year for the last 5 years, but it has a negative growth over the past year. And then you look at Apple had a negative earnings growth of negative 4.9% over the past year, making it difficult to compare to the tech industry. And their growth has been the problem. That's what everybody keeps talking about. And for those who are new and haven't heard this before, when it comes to Apple or any other stock, if there's something like BlackRock, if one portfolio manager sells that stock, they're only allowed to have a certain percentage total in the company, and another portfolio manager picks it up, that portfolio manager will never be able to get Apple back. Most likely, right? So that's why you see them holding on to it like crazy. That's why it doesn't drop like other stocks. Now, as a bonus, I'll tell you this. I'm going to show you the sales, the biggest sales, and one pay close attention to, which is EEM. And they sold about 39% or 26 million shares of this. You might be thinking, well, what the heck is EEM? And it is an emerging markets ETF. And look what it has in it. Taiwan Semiconductors #1, a boatload of Chinese stocks. Tencent, Alibaba, JD.com, you name it. Boatload of them in here. And what's going on overseas? We keep talking about this on this channel. Is you got these high interest rates slowing these economies down, right? China's a hot mess right now. Who knows if they're going to recover? They're trying to stimulate and everything else. But this is why they sold. They were way down in it. And they finally just cut ties about 38%. So they're definitely narrowing that. And this is what I'm talking about. This came out today. Why China's markets are being rocked by fears of contagion. And what they're talking about is their real estate industry, right? They've had their largest builder come out. Now they're delaying payment on one of their bonds and stuff. They had another entity come out over there and they missed the payment for the first time. And so it's just kind of a hot mess. And when you look at this stock chart of this one, you can see, what are you seeing? You're seeing lower highs. It's like almost roll over, okay? And so that's why they cut theirs by quite a bit. They still hold some though, but they cut it quite a bit because the economic outlook in China, and we also know the tensions between China and Taiwan, right? And that would be catastrophic if they ever invade Taiwan and actually take control of it, because you're looking at 85% of the semiconductor industry would be owned by China, but also just the disruption in supply chains would be catastrophic for all countries, but especially the U.S. And so we really depend on Taiwan like everybody else does. And we also depend on China as well. So that would be a hot mess. So there is your top 5 purchases by BlackRock, 1 big sell by BlackRock. There was another big sell if you want to check that one out. That wasn't a big deal when I looked into it. So, hopefully you got something out of it. Let me know what you think down in the comments and stuff. And did you purchase any of these stocks is the big question. But it is important to follow big money to see where they're heading and stuff. It don't mean you copy them or anything, but just keep that in mind. But I always enjoy looking at the average prices that they're in at, right? They've been pushing them up. And this is what you keep asking, well, what keeps pushing this certain stock up? This is what keeps pushing this up, because they're not the only one purchasing these. I'll come out some other videos of some other large hedge funds, and I'm seeing some of these same names being bumped up as well and stuff. So, just keep that in mind. So please hit that like and subscribe button, guys. Always enjoy it as usual, and I'll see you tomorrow.